This is the 10-Minute Contrarian Podcast. This is VP. We are a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, NoNonsenseForex.com, and podcast players everywhere. Episode 248 is brought to us by Apex Omni. That's right. Did you guys see my video yesterday? New affiliate. Actually, an old affiliate. But they were going through a rebrand, so I held off on promoting them until now. But I'm so happy to promote them because they fill a very large need. So they're incubated by ByBit. So they're going to look almost just like ByBit, but it is DeFi, which means two things. One, Americans can trade there. Anybody can trade there. My fellow Americans, my dear Iranians, all of you can trade here, and you can do it privately. And there are lots of options here. It's very unlike a lot of DeFi platforms. You get a ton of options. And if you click my link, which you can find on the Apex Omni blog, you will get something that nobody in DeFi ever gets, and that is your very own customer service representative, along with other benefits too, which are exclusive to that link. This is what a lot of you have been waiting for. Privacy matters. Options matter. And with Apex Omni, trading is your business. It is the 10-Minute Contrarian Podcast, and for episode 248, I was a bit torn on what to talk about. It's not that the spreadsheet is getting lean. It's certainly not. It's just, do I want to keep talking about oil and what's going on in the Middle East? For a few reasons, but mainly is, this is a contrarian podcast, and if we're really being contrarian, we should be talking about all of the sweet divergence. All of the absolute gifts this crisis is giving us. And believe you me, we will talk about it. But I figure if I'm going to do one more oil episode, it just makes sense to do it now, and we can kind of close out the series. Because make no mistake, oil is a part of what we do here, and it just doesn't get the amount of shine that I feel like it should get. So I'm very happy to talk about it. I'm glad the awareness is back, albeit under more unfortunate circumstances, which really, is going to be the case with oil. But it's one of those things, and I said it last episode, and I'm going to say it all the time now because I love this saying because it really pertains so much to what we do. But these things don't matter until they matter. And that's why you have to invest in things when nobody cares. Because they will. And when they do, oh boy, you're going to be really glad you got in cheaply and just held your nose and bit the bullet and bought when it just seemed like, for some goofy reason, that you thought these things were just going to wither and die on the vine because they just weren't in the conversation at the time. It really is kind of my job to break you from that awful circle that so many people fall into. By so many, I mean almost everybody. Even I'll bet the majority of you, which is completely inexcusable. But I can only do what I can do. So let's get into this particular episode, which is going to be not so much about buying things when they're cheap, but what to do if one particular thing were to get really, really expensive. Which is another reason I'm really happy to bring this episode to you, because these things also happen, and we need to be ready for them, and we need to have a game plan because it might happen so quickly that I wouldn't even have time to put a podcast together to even tell you what to do. It might come and go so fast. Or what would actually be worse is if it did happen and you had no guidance, but you really needed it, because let's be honest, that's going to be a crazy, panicky, emotional time. And it may compel you to do things outside of what you would normally do, which is also what we really try to avoid here. And we're going to talk about that as well. Now, before we do that, I wrote a very important blog post on Substack. And if you are not subscribed to it, I will always have a link down below in the show notes for you to go subscribe to it. I've said it before, you're probably getting just as much alpha there as you're getting here. And it's completely free, and they will notify you via email if you want to every time I put something out, which is about maybe once every 10 days. I'm going right about that clip right now. But on that blog post, I said to you, really, you need to make a decision right now for the rest of 2026. Now, I know we have a much longer time frame than that here, but with everything going on, as far as the rest of this year goes, you need to decide who do you want to be going forward. And there's no wrong answer, but it's pretty binary. Are you going to be the hardcore contrarian that says, okay, no matter what's going on in the world, I'm just looking for deals? I'm completely fine with my entire portfolio eating shit, minus the energy stocks right now. If it means I can get, smoking good, completely unreasonable deals on a lot of the things that I really want to buy. That's option one. Option two is to say, okay, I kind of know a recession is supposed to be coming up, and this would be a pretty good catalyst for that. Oil is oil at the end of the day. People are probably overreacting like they always do, but it's still oil, man. And it's, I've been looking for a time to de-risk my portfolio, and no better time than right now with something like this going on. So let's just kind of chill, move into cash, generate some very safe yield, and let's just let this whole thing play out. I'm not so inflexible that I'm going to sit there and say, no, it's got to be this one thing all the time, no matter what's going on in the world. No, there are two ways to play this, and I understand both. And so step one, my advice for this episode is to go read that blog and decide right now what it's going to be. Write it down. And while we have a little bit of break in the action while it's over the weekend, and emotions and the news cycle isn't too crazy right now, and we're all of rational minds, make this decision now, write it down somewhere, tape it onto your computer screen, on your wall, whatever. Say, look, this is how I'm going to approach the rest of 2026. And then now we can talk about something almost completely unrelated to that, because you'll see what I'm talking about. On to oil. Now, when I say $200 oil, I mean $200 WTI oil. You might see panicky spikes in the other two oils, Brent crude and Dubai/Oman. But the big talking point has been a possibility of getting up to $200 West Texas crude, which would be about $50 more than the all-time high. Again, seems a bit, I'm not going to say absurd, I'm going to say maybe improbable, but that's a big talking point right now with people who are actually in the energy space. If it was some rando on Twitter who's engagement farming, yes, and this also means people with like 500,000 follows. These people are just as bad as anybody else is on there. But like real industry people, you're starting to hear this from. But the possibility alone, I think, is fairly low probability, but I am merely a trader/investor as far as oil goes. What would I know, right? Now, I would say, too, because the oil industry has two different sides of the political aisle as well, which is something you don't always see in maybe like the precious metal space or the crypto space, but you will see it in the energy space, and mainly oil, because if you're in the renewable space, those people will typically lean left, to where if you're in like the uranium space, for example, those people are going to lean much harder right. And we're talking about whatever the left and the right would be in the United States, because that's the only point of reference I can really talk about. But it just seems to happen that way. But in oil, for some reason, you get everybody, which is good as long as you stay away from the fringes. Because as we all know, the answer is always somewhere in the middle. The fringes are never right about anything. And these predictions alone are coming from people who really sound like they're pretty hard left. I still listen to the Macro Voices podcast, which I recommend everybody does here. I think it's a great podcast. And this past episode, they had two people on, and I'm pertaining to the second guy they had on. And this was one of the $200 oil predictor guys. He was industry, known in the industry. I've never heard him talk, and I finally did. And I don't love doing this, but it's damn it if it's not the case. I heard him talk. He had a squeaky voice, and he was talking in a very panicky, hair on fire fashion. I'm like, okay, this is going to be a guy who is probably rooting for $200 oil because it would screw over Donald Trump. And I was about as spot on as I've been in a long time when it comes to stereotyping people, because this guy was very TDS. And the reason I bring this up is not because of the prediction alone, but if for some reason oil should get this high or even close to it, this is the moment that a lot of these people have been waiting for, and they will continue to add fuel to the fire as much as they can, which is why, even though they're industry, you should not be listening to them. And again, by the same token, those super mega accounts, they're going to have their say too, and they are every bit as useless. Nothing one person says or does, especially President Donald J. Trump, is going to always be good or always be bad. But this is literally the base case. This is literally the jumping off point for a lot of these pundits, even inside of the oil space. So I just want to let everybody know and make you guys aware, this is the one energy space to where you're going to get a healthy amount of both people. The key is to really try to stay in the middle and find the people who are going to be the most factual, not people with an axe to grind one way or the other. Somebody, if you want to, you're like, okay, well, who the hell should I listen to then? Somebody I have always liked a lot, somebody who a lot of you are probably familiar with, this is somebody whose Substack I subscribe to and have for years, is Doomberg, the guy who's represented as a cartoon chicken. He values his privacy, as do I, and he is semi-private in that regard. And I don't always agree with his forecasting. But if you're looking for somebody who is very learned and very smart within the energy space and will bring to the table a lot of things that most people aren't talking about. So, if you like what we do here, I think you would really like him too. And you can subscribe to him on Substack, or you can just catch a lot of the interviews that he does publicly for free. And one of the things I've always remembered him saying is when it comes to energy, gluts almost always follow shortages, which I was like, let's cross-reference that and let's see if that's the case. And damn it, they almost always do. And this is why in the energy space, especially the oil space, we say that, this might not always be the best place for super long-term buy and holds. This is a very unique space to where if you get a spike, especially if that spike seems a bit unreasonable, then it can be a really good opportunity to take your profit and then redeploy that cash into something else. And again, with oil, I can tell you, as somebody who's been trading it for, let's see, what are we at now, 2026, about 10 years, and somebody who's been investing in it for maybe 7 or 8 years, I can confirm that this price action is very spot on. So based on all of those things, I'm going to give you 5 different oil-related investing instruments, well, 4, and then 1 for traders, and how I would personally approach all 5 of those. Should we approach or even get to $200 a barrel USD West Texas crude oil? So let's give a quick shout out to the traders first. If you are an oil trader out there and oil hits $200, this is going to deviate from what you would do in an intelligent trading system. But I'm just going to tell you right now, if I'm trading oil and oil hits $200 and I'm going long, I am instantly getting the fuck out of there. But the guy on the TV said it could go to 400. No, I don't care what he said. You guys need to understand just how much people panic and how panicking is always the wrong approach. All right, if a large fireball is coming out of the sky and headed towards you, yes, okay, run. But apart from that, especially in the financial world, how many times do we really have to see it? I mean, it hasn't even been 12 months. Remember the tariff tantrum? And it's the same narrative every time. They're like, oh my God, this is just how things are going to be. And I talked about it on the show. I'm over here like, all right, that was the whole period of time that coined the taco trade, the Trump always chickens out. I'm like, you can call me whatever here, but that's not really what's going on. It's like, has nobody ever read a basic elementary school book on negotiation? You probably should. It's a very useful skill no matter what you do in life. The problem is nobody else has ever read one either. So they see things like this, And these nobodies sit there and talk about the guy who actually wrote the book on negotiation, and they all of a sudden they think they know more than he does. Well, I'm over here like, well, no, of course he's going to set these tariffs to absurd high levels so he can actually get the number he wants. Duh. Like, how does nobody know this? Anyway, but again, if you look at your monthly chart, you can see exactly when this moment in time was because of the stupidly long tail the candle has, because people realized right away, oh, okay, this is actually not how it's going to be forever. But man, if you could go back and play some of those audio clips and see some of those tweets, panic, panic, panic. What did we see, if we want to stick with oil, what did we see back in 2020? We saw oil go negative, and not just negative, like very negative, because we thought the same thing. Oh my God, the entire world is going to completely shut down. International commerce is going to completely shut down. Domestic commerce is going to completely shut down, and this is just how it's going to be. And what actually happened? Well, it turned out to be a generational time to buy oil because of the absurd way we panic as human beings. So the same thing can be said about moves in oil to the opposite side. Not just the crazy declines, but the crazy peaks as well. But I guarantee you, you're going to hear the same dumbass narrative we hear every single time. They're going to say this is just the way of things now. Yeah, you'll see the headlines too, from whatever hack organization is out there. How to prepare for a world with $200 oil. Complete childish nonsense. Every time. And like Doomberg said, gluts seem to always follow shortages because they do. How long it takes for one to follow the other, we don't know. But when you see a crazy drop into the negative, that is a generational time to buy. When you see a crazy spike to absurd levels, that is the time to sell. And if you're trading, for the love of God, sell. I don't care if it goes to 500. Chances are if you didn't sell at 2, you're not going to sell at 5 either. Let's be honest. If oil hits $200, get out of your trade. Sell. Now, if you have an oil ETF and you're kind of more or less holding that way, so USO in the United States, whatever equivalents you have in other markets, I would take the exact same approach. Pat yourself on the back, take your money, get out of there. Because the same logic applies. Again, gluts will eventually follow shortages, and when that happens, you don't want to be holding an oil ETF. That money is way better off deployed elsewhere, and so you need to get liquid. Moving on to scenario number 3. If you have an oil services ETF, or I will even go as far as to say an oil services stock, I'm going to say the same thing. Just go ahead and sell it. These things are going to move a little bit different. They're better buy and hold options than the previous 2 situations, but energy is still going to do what energy does, man. I've already taken a little bit of profit on the oil services stock that I have, but you better believe if this thing spikes up to 200, that whole thing's going bye-bye. And I will unfortunately probably even have to eat the tax, which I hate doing, which is why I love being a buy and hold investor because this almost never applies. But it's still worth eating the 35% tax in the United States, which, by the way, even if I sell later, that's still going to be a 15% tax, which is more than I want to pay. And I've always believed that capital gains taxes are an absolute crime against humanity, completely unnecessary. I really hate taxes, but not to the point to where I'm going to do a bunch of illegal crap and look over my shoulder for the rest of my life either. So while we're here, I don't know when I'm ever going to talk about this again because I hate talking about taxes because everybody's situation is so different. And that's just not something as a financial broadcaster that it's not a subject that I think I should ever really approach. But let me just say it now. I have been working diligently to structure things to where I can invest in stocks on different markets as an American citizen and as a foreign resident of certain countries, to where I can really get my tax bill way down on the things I love to invest in. I haven't quite gotten there yet. I made one attempt a while back. It was a failed attempt because I didn't quite understand all the rules. But I'm talking to my fellow investors here, and I think 35% of you are in the United States. And this is really something I am looking to accomplish going forward. Because at the end of the day, it's not what you make, it is what you keep. And one of the best things you can ever do for your future self is to structure yourself intelligently and legally to get those percentages down as much as possible. And if you're from a high-tax country, which most of my audience is, my God, you can't do this soon enough. I mean, even if you know basic math, which is about where I top out at, and you understand compounding, which we all should here, if you're not in the process of getting this done now, I'm not really sure what you're doing. There are ways. There are ways with traditional banks. We should all be grateful that the blockchain exists now. There are methods there as well. But I just want to take a little bit of an interlude and mention that here I will bury it in an oil episode, and only the real ones get to hear about this. Even though I'm hoping if you're really a real one, you've already got this process in motion. But as far as how to do it step by step, you will not ever hear something like that from me, because if I say one wrong thing and then somebody goes out and does that one wrong thing, now I got a problem. So anyway, moving on to situation number 4. If you have an oil company such as Exxon or Chevron. Now, I will say if you hold an oil producers ETF, such as XOP or something like that, then I'm going to take the exact same approach as I would if I had a services ETF. I forgot to mention that, so my bad. But if you hold one of these two companies, I almost hate to say it, but these are such good long-term buy and hold forever companies. So I'm talking about Exxon, ticker symbol XOM, and Chevron, ticker symbol CVX. With just like the steady trend line up, these are going to give you long term on top of the great dividends they give you all the time. I would almost be inclined to just do nothing and just sit there and hang on to them. And I know some of you have these stocks in your portfolio right now. I would say maybe, and again, like we talked about with the two choices that you need to be making for 2026, I would say, write this down, decide which direction you would want to go here, and then execute it. But it might not be the worst thing in the world to sell half and then let price come back down and then get your position back to where it was. That would be okay too. But if you just wanted to do nothing and just hang on to these stocks, I don't think that is ever a bad idea. I mean, for one, these aren't just oil companies, they're energy companies. They are heavy into oil still, but we've seen that you just can't replace oil. Some of these countries have gone maybe a week without it, and they're in danger of completely shutting down. We're just not to the point to where we've replaced oil at all at scale. So you might see some people out there telling you these companies are a dying breed. They are not. They've been saying that about these companies for 20, 30 years. And they just continue to do amazing and pay you really well for having the wherewithal to hang on to them. And then scenario number 5. This has nothing to do with oil stocks, but what about everything else under the sun? What will the prices of those things do under $200 oil? Well, the answer is most of them are going to tank, and tank for no reason. Like, if you think we have sweet divergence now, holy crap. This is probably going to be a generational buying opportunity for almost anything you could ever want. And this is where I would probably take a lot of the cash I have and just kind of suck it up and just start buying hand over fist. A true contrarian investing jubilee, which means it's perfect to take any oil asset you might have, minus Chevron and Exxon, and immediately put that cash into something that's having the mother of all fire sales. Sweet divergence everywhere. Is $200 oil good for any of these companies or any of these stocks? No. But is it going to stay there? Also, almost certainly no. So why would you be afraid to buy these things? Back the truck up if you see this happening. Again, this might happen so quick, I might not be here to tell you on the weekly podcast that you need to be doing this. Maybe we will have an emergency midweek episode. But the whole point of this particular episode is just to prepare you for a situation like this, as probable or improbable as you might think it is. Because if it ever was going to happen, this and the crisis we're currently seeing would probably be the one time it would happen. So we need to be prepared. And please know that dumping all of your oil equities and buying, and not just buying, feverishly buying things which are seeing record lows in their prices due to something like this, is going to seem absolutely crazy. Like, you might be one of the few people even doing it. But how many times do we have to see something like this to know that you are not being crazy? You're not panicking like everybody else who's going to be wrong, just like they always are when they panic. You're just being early.